What's good, guys? It's EBFX, and you're welcome back to my channel. If you're new to this channel, you are welcome, and you should do well to hit the subscribe button and turn on post notification because you don't want to miss any of my videos. So, guys, in today's video, I'm going to show you the model yet again. So, I'll be explaining the model, and I'm going to show you a a setup that has printed on NZDCHF that perfectly explains this model. So guys, this is the model. This is the model in a sell situation, in a sell scenario. So what you're looking at is you want to first of all see an obvious liquidity sweep. Once you see that, the next thing is for you to see a break of structure to the downside. Then it can happen in two ways. It's either you see the inducement first before the second break of structure, or you get to see inducement before the main break of structure, right? So it can either happen in this way or this way. So in this first pattern you see right here, we have a liquidity sweep, we have a break of structure to the downside. The market comes and induces this point of interest. After it induces this point of interest, it then continues down to give us a second break of structure to the downside like this. So once we get this second break of structure, the next thing that then happens is that price comes back all the way up, takes out this inducement, taps into your POI, and continues to sell. All right? So this is the first way you can see this model. The next way you can see the model is price gives you a liquidity sweep. It doesn't yet give you a break of structure, but then it comes up close to this area of interest, this point of interest, then induces it before it comes down to give a single break of structure down here. So once you see this, you can then wait for price to come back, take out this inducement, tap your point of interest, and sell off. So this is the model in theoretically. So I'm going to explain to you what you need to look out for to make this model valid. So before I do that, this is it on a buy scenario. You have the liquidity sweep, you have the break of structure. The first break of structure comes to induce the POI, gives you a second break of structure, and then boom, your entry price comes back to take out the inducement, tap your POI, right? So in one case, you can have like two break of structures, while in the other scenario, you can just have one break of structure. All right, so let me show you what price is doing on NZD-CHF. So this is NZD-CHF, and this is what price is doing. So if you want to trade this strategy, there are three things that you need to, like three checklists you need to check for you to ascertain whether the model that has printed is valid or not, because there's something that most traders don't take into consideration. This model usually prints often, like it can print anywhere, but just for the fact that this model has printed, it doesn't mean that you're just going to jump into the trade. There are certain criteria that you must check to see if they are in place. Then fine, you know that this model is valid, you want to take the trade. But if they are not in place, then you know that this is most likely not going to hold. You get? So the first thing you want to check is structure. So the first thing you want to check is structure, right? I want to make sure that the model that has printed is aligning with the market structure, right? The next thing you want to check out is liquidity. So you want to check and see that the structure that has, the model that has printed has, taken, cleared off or taking, the necessary liquidity that is supposed to sweep. Then the next thing you will consider is your entry or the POI, whatever. All right. So these are the three things that you will consider in, you know, trying to consider whether your model that has printed is valid or not. Now, this is NZD-CHF and we're on the 4 hours time frame. So let's look at this particular model that has printed here. Now we have price, in a somewhat downtrend from this, right? So in you from this trend line I just drew, you can see that price is going down. Even though getting to this stage, it is now in, you know, a kind of a range. But then, generally speaking, you can see that this market has been coming down from this high, getting to this point, it started moving in a range. Then the next thing you want to also establish is the current price action. Where is it coming from? From the current price action, you can see that price has just, rejected off a level of resistance. So price has just bounced off a level of resistance or a supply area. So from the structure, we can see that one, price has been bearish for a while. It came and started dancing around this range here. But even at that, it has just bounced off an area of resistance, or it has just, come off an area of supply. So what then does that mean? It means that this whole price action that is playing out here, it's favorable for us to look for sales, right? It's favorable for us to look for sales. So that's one. So in the aspect of structure, we have already certified that structure-wise, this model that has printed is good, it's aligning with the structure, right? So what is the structure? It has been selling, then two, it has come retraced into this range, and then it has retraced into this area of resistance that we have marked out, or supply that I have marked out here, right? So that's for structure. Then what's the next thing? Liquidity. Now, for liquidity, you can see that we have a very obvious liquidity sweep here. A very obvious liquidity sweep. In fact, this whole trade idea is price just repeating itself, because if you look very carefully, you can see that, first of all, we got a liquidity sweep here. After we got this liquidity sweep, price came and broke structure here. Give us the first break of structure here. After it gave us this break of structure, it came and gave us an inducement here. It came and gave us an inducement here. So after this inducement, what then do we see? We saw another break of structure here to the downside. Price gave us another break of structure. After this break of structure, price came back, took out this inducement, and then it sold off. So if you're even going to trade this model this is the second time this model is printed in this particular scenario here. So somebody must have already taken this trade. You put your entry immediately after the inducement, put your stop loss just above this high, and then you target below. So this has given about, 1 to 3. You want to make your entry smaller like this, I give you 1 to 3, but if you're putting it just above the inducement, this is a 1 to 2.5, right? So I saw this setup, but then I didn't want to take the trade because of two things. One, I saw that price give us like an equal high here, relative equal highs here. So in my mind, I was like, this could be like a trap. Price can come up to clear all of this liquidity up here. So that was why I didn't want to take this trade at this level. So I just decided to wait and see what price will do. So, and aside from that, we have like a gap inside this other block. If you go to the lower time frame, you see that when market open, price open and give a gap here. So I didn't want to, take my entry on this other block. So I waited to see what price would do. And then after I waited, price then delivered the model a second time. So seeing that this model has printed again for the second time, that's what is making me, keen on taking this trade. So now for the second time, what has the price done? Price has come, taking this liquidity here, give us a break of structure or change of character to the downside here. After it gave us this change of character to the downside, we go to the 1 hour, you see that it's clearer there. So after the first change of character to the downside, price came back up and gave us the inducement. So after the inducement, price came and gave us another change of character to the downside. So you see that this model has printed exactly. Give us two breaker structure to the downside and an inducement. So right now, you can see that price is coming back up. So that's why I have my entry here. That's why I have my entry here. Once price comes, then we see how it goes. It taps me in, and then it continues selling to the downside, right? So that's what I hope to see. So I'll be targeting here. This will be my first take profit. In fact, this will be my take profits. I'll be targeting 1 to 3.3, or just bring it down a bit lower, right? So this is a 1 to 3 hour trade that I'm looking to take on NZDCHF. So this is a live trade. Like, I've already placed my limit order and I'm waiting for price to come into this area. So I'm going to update you guys if we get to see price come into this area and deliver on this model. So the next thing I want to talk about is the POI, or your entry. Now, there's one rule you must bear in mind every damn time. There's only one thing that makes your POI valid, that makes your entry valid, and that is the inducement. If you don't see this inducement before your POI, forget it. Your POI is most likely not going to hold. It has a higher chance of holding if you get to see a POI that is, sorry, an inducement that is close to the POI. Like this one, for in this example here, you can see that the inducement is very close to this my POI. So that's what will make your POI, valid. That's what will make your POI most likely hold. But if you have an inducement that is far below, or you don't have an inducement at all, what will happen is that this POI might not hold. Price may just break it for it to even sell off. You get? So it's very important that you see an inducement like this on your POI. And the more obvious it is, the better. In this case, you can see how the inducement, the formation of this inducement took a lot of candles. You can see candles that came down and candles that have come up. Sometimes it may just be one single candlestick. You get? If in that case, it's less likely going to hold, right? But in the case where you see it very, very obvious, very, very clear, then you're happy and you should know that your inducement, your POI is most likely going to hold. So that's it, guys, for this model. I hope you got value from this. If you did, don't forget to hit the subscribe button. Don't forget to like this video. So just a quick recap. Let me go back to the diagram of the model. So just a quick recap, right? This is what the model is. This is what the model looks like, right? This is the sell scenario. This is the buy scenario. And then three things for you to always have in mind whenever you want to trade this is your structure, your liquidity, and your POI. Structure, you want to be selling in a market that is obvious that you should sell. You want to sell in a downtrend. You want to sell in a market structure that favors the sell. Not that price is buying, price is in an uptrend, price is moving up, targeting buy side liquidity, and you're trying to short because the model has printed. No, you're only going to, waste your time. So structure wise, your strategy, your model should, align with the structure. Then liquidity. Liquidity is you have to see that price has taken obvious liquidity. You want to see that price has cleared obvious liquidity, not the one that you're guessing. No, let the liquidity sweep be very obvious. That's what will make the model valid. Then lastly, your entry or your POI. Your POI, where you take your entry, must be that it has an obvious inducement. Inducement is price just faking out. Price giving you a fake move, a fake, you know. So like now in this case, this is the inducement, right? Go to the 1 hour. This is the inducement. So this is like a fixed sell. The main sell comes after price has taken out this inducement. So inducement is more like price giving you a fake movement before it comes back to tap the main point of interest and gives you the main movement, right? So it's also a form of liquidity. You want to see a very clear inducement before your POI. That will be what will make your POI value, right? So I hope you got value. If you enjoy this content, give me a like and subscribe to my channel, and I'll see you guys in the next one.